If you are not an Nvidia investor, you may still want to be a part of its extraordinary story of growth and resilience. You may day trade Nvidia for a living. This stock has a potential volatility of $4 to $5 a day. On some days, the volatility is higher than that. That makes it an excellent day trading stock. If you can catch a part of Nvidia's volatility every trading session, you may well be willing to take day trading as your new profession. But how can you day trade Nvidia profitably? You need a strategy. You need to know 3 things: when to enter the market, when to exit, and how to minimize your losses in case the market goes against you. You need an indicator that gives you precisely these 3 information visually, so your trading can be simple, easily explainable, and repeatable. When we want to show you how a trading strategy works, we mostly take you to the TradingView charting platform. But for this strategy, I will take you away from TradingView. I will take you to bar chart. That is because the candlestick pattern we will use on our chart is not free on TradingView, but free on bar chart. I have linked bar chart in the description below, following which you will appear right on the Nvidia chart. Open a free account and follow these instructions to prepare your chart for day trading. When you appear on the bar chart page, your chart will look like this. Remove the volume window by clicking the cross mark beside the eye icon. We don't need it. The chart shows the daily time frame by default. Click on Daily and choose 5 minutes from the drop-down menu. Now click the candlestick icon and choose Renko from the drop-down menu. The chart is looking much cleaner now. We need one more thing: a moving average. Click the Indicator tab and type Moving Average in the given search space. Moving Average is the 3rd one on the list. Select that, and instantly we have a chart giving us a clear picture of how our trading session looks like. But the moving average has 20 period on it by default. Change that to 9 for day trading. Now we have a more effective chart before us. This is the Nvidia chart of the 16th of October. This chart shows the pre-market hours, that is hours before 9:30 a.m. when the regular market opens, and the market up to 2:30 when I took the screenshot for this video. During this time, you could enter the market twice, wait for the Renko square to be green and end green. If you want to buy Nvidia, you must have the square cross above the moving average. Enter the market at the beginning of the 2nd green square. Continue holding your position until you have a full red square. Sometimes a square may begin to be red and continue to be red until the final moment. Once the square is complete and red, exit your long position with a profit. But you can see, you can still hold a part of your position until the red square crosses below the moving average and completes as red. Sometimes profit-taking may turn a square red, but that may not be the end of the trend. After 1 or 2 red squares, green squares appear and the stock moves higher. In all cases, my recommendation is that enter the market after a pullback. But if you see that the trend is green and the squares are close to the moving average, you may still buy Nvidia to go long. Sometimes Nvidia outperforms the market. It keeps on rising without a significant pullback. If you enter in the middle of the trend, you can still ride the rest of the trend. In the same way, if you want to short Nvidia, you will have to wait for the red squares to cross below the moving average. If the moving average indicates an upward trend, do not short Nvidia. I am against shorting Nvidia or any semiconductor stock these days, as the AI-related industry is showing signs of unprecedented growth. You may short them for a session, but not for overnight trading. But if you choose another stock, or if you see that Nvidia is showing significant signs of fatigue and losing momentum, something that happened in August, you may short the stock. Wait for the moving average to bend and let at least 2 red squares be full before shorting Nvidia. Hold the position until you see a full green square to cross above the moving average. I took this screenshot of a Palantir chart to show you this example. You do not exit after you see the first green square. Although full, it ends below the moving average, and the bearish trend continues. It continues until the second green square touches the moving average and crosses above it. Now the market is ready for you to buy the stock again for a profitable new trade. Now, how to manage your losses or minimize your losses? As you can imagine, this is not a 100% win strategy. No trading strategy comes with a 100% win. If there was one, that would remain a secret. You would never know of it unless you make one for yourself. More importantly, any strategy that gives you a 100% win is against the existence of the market. Since the market is not going to disappear anytime soon or at all, you will not have a strategy that offers a 100% win. On this strategy, your stop loss has to be 2 squares behind your entry point for both long and short trades. You are more secure if the stop loss is beyond the closest swing point, but that will depend on your risk appetite and how big or small your account is. If you have a smaller account, you may have to work with tighter stop losses. Your profitability will depend on the number of trades you win and how big those wins are. If you have a bigger account, you may not be harmed that much if you give a little bit more space to the stock to wiggle before advancing in your desired direction. But in any case, never trade without a stop loss. A strong stock that Nvidia is, it too operates within a market, and the market has many different stakeholders that want to exploit or influence it. You must protect your capital today to be able to trade tomorrow. You can use this strategy to trade many different stocks and ETFs, even Forex, crypto, and futures. I have already shown you Palantir. Here is Upstart. Here is Coinbase. Here is a penny stock. Here is Novavax. Here is TNA, Direction Daily Small Cap Bull 3X shares. This is Roku. This is ARM Holding, another semiconductor company. This is Meta. This is ASML, which alone brought down the Dow Jones and Nasdaq a couple of days ago. This is Vanguard's S&P 500 ETF VOO. This is SOXL, Direction's Semiconductor Bull 3X ETF, something I often trade. At around $35 per share, it regularly gives you a $2 to $3 trading volatility. It has excellent volume and spread. I often exit the market with $1 per share. If you cannot afford to trade Nvidia, trade SOXL. As a semiconductor ETF, SOXL is highly impacted by Nvidia's price movement. If you have a bigger account, trade Nvidia. If you have a small account, trade SOXL. Do not look for new stocks every day for trading. Make a watch list of only 5 assets, including stocks and ETFs. Understand their behavior, know their patterns, and look for trading opportunities in them. Trade them conservatively until you are ready to trade more volatile stocks like the daily gainers and decliners, and until you can resist trading impulsively.